Good morning, welcome to my webinar, Price and Pivots. Now, I get a lot of questions on pivots. Obviously, being a pivot trader, it makes sense. I get asked lots of questions on pivots. But what I decided to do today is this is relatively basic. If you're very familiar with pivots, then this video is not really for you, or this webinar is not for you. This is for those people that have sort of seen them, got sort of some idea what they are and would like to know some more about them. So it really is, as I say, for the sort of starting point of knowledge. In terms of price, I can't talk about pivots without talking about price, so I'm going to go straight into talking about price before I talk about pivots, because without price we'd have no pivots. So let's crack on, and I'm going to just give you some a bit of introduction regarding the back end of this. As I said, it's already targeted for those with little or no knowledge, but that want to understand more about pivots and how you can use it in your trading. Now, this is not going to be a lecture. I want to hear from you. I'd love to hear questions coming through at any time. We'll take them as we go, but also if I ask some questions, I'll fire some things back at you. If at least one or two of you could just type in something, the more that take part, the more useful it will be, and in particularly the more questions that come through, the more you'll learn from the content. Now, if you're watching this on some sort of catch-up YouTube or whatever at some later stage or video, you can ask me questions on the subjects underneath the video if it's YouTube, or via my Discord or Telegram sites. They're all there for you to ask questions on, but not right this minute. If you're watching it freshly, stick it straight onto YouTube or onto the room. Okay, let's get cracking and look at the first element of this is price. Sorry, ma'am, I'm not going to talk in depth about strategies. It's more an introduction to pivots. I'll show you some lots of stuff of reading price and pivots later, but it's not going to be loads and loads of strategies on pivots, but I'll give you some broad ideas, more so than anything. It's a step at a time when you're learning here. I realise that a lot of people want to step across and all they want is strategy, but if you don't understand what you're using, you can't apply the strategy as well as you should be. So here we go. As I've suggested in price, I never look purely at pivots. Well, we couldn't look at pivots without having price, of course, but price structure and understanding price is so important to using pivots and applying pivots within your trading, particularly with the strategy side of things. Not only do I look at the price structure, and we'll talk about that and I'll come through it, but I'll look at the candles and the bars, and it shows you a lot of what's going on in the current period that you're trading in. Now, in terms of price, I'm going to flick backwards and forwards here. Firstly, what do I mean by structure? Well, I'm going to pick up the chart, he says, and I'm going to talk about structure here then. So let's just go to I'm just looking at the euro dollar. It's right up to time, by the way. This is being recorded on Saturday. It's Friday at the moment. On here it's the last day, so it's a Saturday the 11th. So it's right up to date. There is nothing before, sorry, nothing after this. This is where we're sitting at the moment. So firstly, structure. What do I mean by structure? I look at what's happening with the price at any point. Obviously, the price nearer where we're trading is the most important and is essential, but we should be looking at the overall structure of the market. What is it doing? I mean, for a start, do you really want to be buying here necessarily along these lows? Maybe there's something that would suggest you would, but not for all. Okay, let me just switch that up a bit. Hopefully, for those that have got the sound a bit lower, that's a little bit higher on there now. Okay, so I mean, one of the things I have with the markets and traders and retail traders, I talk about this a lot. We have 80 to 90% of retail traders out there losing money. Fact. It doesn't matter what they touch, they tend to lose money. Now, reason why they spend most of their time looking at counter trending. It's a real knack to actually counter trend trade, and there's opportunities to counter trend trade on the smaller time frames when the bigger time frames are working with you. So bear that in mind. So I am looking here at market structure to see what the market's doing. I want to be trading on the upper time frames, structure and shape. So this current market, what we've seen recently from October through to this year, this is a daily chart that I'm showing you at the moment. We've got higher lows, higher highs. The structure is positive. It's obvious it's positive at that point. It's obvious now it's been in a downward trend, a retracement trend. It doesn't matter the fundamentals behind this, why it's happening for right now. We're just purely looking at technicals for a moment, and technically at the moment this has been running down. Now if you're not too sure, well, I think it's pretty sure of what it's been doing there, or what it's doing at the moment. But when you start coming down the time frames a little bit, you will notice it's not always as clear as it looks on the dailies, but the real structures coming from the dailies, what lays beneath may be the point of change, and there can always be a point of change. But the important thing, what I wanted you to understand firstly, is in the term structure, I mean, what's the general market doing? At the moment, the euro dollar is in a downward trend in this intermediate time frame. When you come up a time frame though, is it in a downward trend? Yes, it's been in a major downtrend. It's had seen a significant retrace. We've now seen a shorter term retrace within that. Could be just a bull flag there. So we could be seeing a change. So there is conflicts between the structure of what's going on here, and there will always, I say there always will be, there won't always be, but there quite often will be structure conflict. So you've got to look at things and take a view. The more that it is aligned, the more chance you've got of making money trading the trend. The more choppy it is, perhaps that's the time when you should be looking at your counter trends. So that's structure. That's what I mean by structure. In this point here, lower highs, lower lows coming through. The overall structure for that on a weekly chart down there was bearish. The overall structure here could be argued it's potentially still bullish, and as I say, it's determined by the current price action. When you drill down into the time frames, it then shows you in a bit more detail. Well, it's still on this time frame hasn't put a higher low in. It's put this horrible stuff in around what we've seen yesterday with the non-farm payrolls, etc., driving it, but it's not absolutely clear. We haven't yet got to a real significant higher low on the daily time frame, and we've got a very marginal one here on the 4 hourly. So the signs of weakness aren't really, of the weakness of the downward trend, haven't yet gone away. Okay, so that's what I mean by structure. Let me come through and put the slides back on there, and let's press on here. Trend lines, simplest thing ever. If you want to be trading pivots, as I said, you really want everything aligned. Trend is, I mean, I'm talking about structure. Trend is the obvious point to go to next, looking at the trend lines and what they're actually doing. So you can follow the trend lines as you go through. So let's come back to the chart a moment. Simple process. He says, looking for the chart. Press the wrong button. There we go. So let's come back to a daily chart for a moment. So we're looking at a daily chart. So trend lines. Now I've drawn a trend line over the current price action here already to save time. Basically, it's the points I draw between the upper trend line here would always be higher, confirmed higher lows. I say always be. That's the most significant points when you're getting confirmed higher lows. What do I mean by confirmed higher lows? Let me just get my pen. So what I mean by those is when you've got a high here and you've got this low here and it's chipped out here, then you've got a higher low. When it's broken the high here, you've got another high low. These are significant points. This is where I draw trend lines across. I know it's very basic, but a lot of people have these really weird trend lines that I see on their charts, and they don't have a lot of weight to them. Now, as the market progresses, you'll have these higher lows coming up here, and it may be that the trend line is drawn slightly different. That's fine. It's a moving market. What we had here was a significant low. The most obvious previous single low without drawing all the way through price is from this point, so we would draw from here to here initially on this way down here. Well, we've had a lower high, sorry, a lower low here. That gives me a lower high, and that gives me a point to draw the trend line to the downside. But it gives us the picture of where the price is going. Using pivots doesn't mean to say we counter trend all the time. We trend and trade with, I trade as largely as possible with the trend. The probability of the moves will be better. Okay, so drawing the trends on, very, very simple. We'll just put this other one on so you can see where it is. When it breaks the trend and everything else is sort of weakening at the same time, that's the point that you start looking in the opposite direction. Whilst it's all running in trend, trade with the trend, trade what you're seeing. Okay, moving on then through, let's come back to the next point that I want to talk about in terms of price here is retracements. Get an understanding of what the price action is actually doing. Now, I'll come back to a chart each time. Look at the retracements. So, excuse me. So when a price is moving up here, pulling back, pushing up, pulling back, this is what I mean by retracements. The overall move looks like it's moving to the upside. That's fine, but generally we see weakness when you see multiple retracements. The more frequent they are and deeper they are, they'll give us a chance to think that the trend might be coming to an end. I've talked about this recently in a video I put on YouTube, but it's the same principle applies. I'm just coming to the downside here. When you've got more frequent movements here, very deep, it broke the prior highs there and eventually rolled over. But it's suggesting the more you get the price moves against the current trend. So if the trend is running up and we start seeing some deeper retracements, that could be the trends rolling over. That's the time you trade the pivots to the short side as opposed to the long time side, possibly. But you got to be careful that everything else, the structure's still looking strong. And if the structure's broken, well, that's fine. If the trend line's broken, that's fine. You go counter what was the trend into the new trend, and you trade that trend through that way. So that is the first 3 points there. It's just so looking at frequency and size. As I said, the more frequent they come, the more likely the market is to turn, and it may be then you're looking slightly different or not in the market at all. Finally, divergences. Now, I put this right down the bottom because it is the least important and it's the most traded. Unfortunately, everyone wants to trade against the direction of the market, and divergences are a great tool for doing so. Now, if you're using divergences in the major trends, so if you look at the weeklies, the dailies, and maybe the 4 hourlies, the trend is pushing up, and then on the short-term time frame, you've got a divergence that's going to kick you off in the direction of the main market. Then you take, that's fine, it's brilliant, great use, and it is good use so long as they're read properly. The biggest problem with divergence is people want to get into the trade too quickly with them. They want to get in as soon as there's a divergence and they have multiple losses. However, use them well and you'll find that with the structure, the trend lines, the retracements, it all sits together, and you'll find that you can read the price first much better. So if we pop that chart back up here, divergences. Divergences, if you look across this chart here, you would have had most likely a divergence here, divergence here, divergence here, divergences here, certainly a divergence here, which would be, thank goodness for that, it's one that's worked almost. So you see multiple divergences. You don't need an indicator to tell you there will probably be a divergence. as such, although you're using the indicator as the gauge. Look at the price action. I've already talked about retracements. The more retracements you get, the more likely, because of the way that RSI, MACD, etc. are calculated, they're based on the averaging of price mostly. So, or moving averages, which is based on price. So every time you get anything of a retrace against the price of the market, you're most likely to get a divergence. On some systems where, or I say some systems, on some settings, if you've got something like a MACD with a wider time frame on it, then the divergences may not be picked up quite so. They're more subtle in some of these movements. In fact, we can pop it on. Let's just double click here, hide all these other ones. Don't need the RSI on there as well as, but you see that this market was broadly diverging as it was pushing up higher. Now traders would be trying to trade any opportunity of that, yet the market was structurally still pushing up. It was putting higher lows, higher highs in all the way through that point. Well, okay, you can't. This trend line wasn't in at the time. It may have been breaking some other trend lines only when it got to about up here somewhere. It had walked steps out of it, but structurally. And as I say, these divergences that are kicking in through here, most of them they'll be just wasted money. And again, the relevance to this is the pivots, in terms of you want to be trading the pivots in the right direction, and we're looking at price to give us direction. If you're using things like divergences, then you need to be careful. The probability of the pivot being hit isn't quite the same. Okay, so when can a divergence be used? Generally, my suggestion is, and where they're strongest is where you've seen the break between if you've got the two highs here, you've got the low in between. This is obviously a bullish market at this stage. Some would argue, of course, it's diverging, so it's weak. And to be fair, this is a daily chart, so yeah, you've got a day or so that's light, but it's fractal. If you were looking at these markets overall, excuse me, it's barely anything in terms of movement. It's gone up, it's gone off and stopped you. So you're the point of where the divergence ends is the break of the low between the two highs in this case, or the high between the two lows if you were looking at the in the opposite direction. So any of these points, you're looking at the break of the low between, which didn't happen here. Got into a right mess, didn't it? Well, it wasn't putting a new high in at this point here. There was probably a divergence. Yep, the divergence between here and here. Did it break that low in between the two? No. And so the only real divergence, it's probably very marginal, which eventually got broke, was up here. So it's, as I say, it's a bit of a lesson here in reading price and pivots. So we look at just to confirm what we're looking for. Structure overall is the price. What's the price doing overall? If it's not clear, it's difficult to trade. Let's face it, you can't be trading all of the time if you can't understand and see where the market's going. Well, you can be, but that's why people lose money. Okay, so we got the structure. We got a trend line. We can put trend lines on things. Is it within the trend lines? Is it starting to break the trend lines? Is it showing weakness? Are we seeing these retracements very frequently and getting deeper? The deeper it is on an upward move, the more likely at some point one of those moves is going to roll over. And finally, are we getting divergences through the market? Are we getting this price action pushing through? We can then if we can see all this price action pushing through and these divergences coming through, just wait for the breaks of the lows. When you got everything together, which it probably was up here pretty much, there was a crafty old divergence there probably. I'm just looking here, this was pointing downwards, this was pointing upwards. You got everything coming in, you got a break of a trend. You haven't got a higher low at this point. The higher low came in a little bit further on this time frame, but we did see some structural lower highs coming through a little bit further. Okay, so there you go, just an element of price, because as I say, I can't stress how important it is to be on the right side of the market, whatever you're trading. Now let's switch this around and clear this off and get rid of that horrible indicator off the bottom. don't like it, a lot of indicators on the bottom, because they don't really show you anything more that you can see in the charts themselves. So that's where we're sitting at the moment. Let's just give you my presentation back up again for a moment. So there you go, we've gone through all of those factors, and that's my session on price effectively finished. From here, very brief touch on fundamentals. If you're using pivots or using any analysis, doing any analysis, you should just be aware of key news events, because it can shoot it out the water. If you've got the ECB meeting on Tuesday, it's Thursday this week coming, if you're totally ignoring that, you're not even aware that it's happening in your day trading or swing trading, and it kicks off, we could see some really big moves, and you're trying to trade against what potentially is some very big moves. It can just stop you out for no and slip you as well. So be aware of key news and in particularly significant game changes. If, like, I used the ECB meeting on Thursday as an example, if we're seeing people seeing the results coming out and the ECB members suggesting there'd be bigger increases or lesser increases, whatever it is, something that's not expected, in that case it can be a bit more of a game changer and the markets can move. Again, you need to be aware of it. It can tie up along with the technicals, and you all shape together. If you put the technicals together and you've got this market it has been rolling over, but as we said, on a weekly basis, it might just be a bull flag. It has support to a degree of a yearly pivot, which I'll talk about in a moment. If this all comes together, and you've got this significant game change and they're going to still be bullish, etc., we could see the euro on Thursday, for example, continuing up on that weekly picture of the trend to the upside. Right, there you go. There's my bit on fundamentals. Important, extremely important. They drive the markets at the end of the day. So, introducing you to pivots themselves. Now, many of you will know they've been around for quite some time. They were originally used by floor traders in the equity and commodity markets. The S&P traders were probably the best known for using them. They're very, very simple to calculate, and you could do it on the back of a fag packet, basically. Those are the days when they were allowed fag packets in the S&P pits. Calculations, as I said, very simple. Now, one thing I'll make clear at the beginning of this, there are a lot of variants on pivots. If you've been looking at pivot levels, there's so many. I can't remember all the Fibonacci pivots, Camellia. There's numbers and numbers of them. However, the most broadly used, and hence why I use it, is they're either called floor pivots. On TradingView, they're referred to as pivot point standard, and that's what I use. That is the key pivot that I use. I'm not interested in all these other ones. They've all got slightly different price levels or whatever else. They may work and might work in the way that whoever's played around with them uses them. I don't really care. I know that normal standard floor pivots are more frequently used. There's a lot of algos that are based and set up on pivots these days. We know because we can see how much volume starts coming in at one of these pivot levels. They are so widely used. Why not use the most standard platform, the floor pivots? Okay. Now, they can be used on many different time frames. I use them across a number, which I'll come on to in a moment. They're useful for all types of trading. So if you're a position trader, a swing trader, a day trader, a scalper, there's pivots for you that can be very useful for what you're doing. And combine the whole lot together and get on the right side. It also gives you pictures of idea of trend, etc. So, as I say, I use quarterly, a yearly, quarterly, monthly, daily, and 240. Now, what do I use most? Monthly, weekly, daily is most. I come back, I look every now and again at the yearly and quarterly, and make a note of any key areas. I don't have them on my charts all the time. Otherwise, it starts looking like a mess of lines across your charts. You can't see anything. Importance of when you're trading is to have clearish charts, as clear as possible. So you can switch them off on and off on TradingView. You can switch them around. I'll show you that all now. And they're brilliant for just remembering where things are. As I say, the yearly, the quarterlies, they're miles apart. They're you're sitting in the yearly obviously all year. Okay, let's get on before I get onto stats. Let's look at pivots, and what I'm going to do now is go through quite a bit here, and we'll build it up, put everything together in terms of what they are, how they're calculated, etc. We'll start off looking at the main pivot point. Now I've got a daily chart here, so we'll look at this actually may be a key thing you may want to make some notes on. If I'm looking at a daily chart, I'm looking at a monthly pivot. So I'm looking at the time above it. So if I'm looking at, as I say, daily chart, I'll look at the monthly pivot because it will give me some idea of the bigger picture. If I'm looking at a weekly chart or a monthly chart, I'll look at the quarterlies or the yearlies generally. Although I will still look at a yearly pivot on the lower time frames as well. Just if I can pop it on there, I'll just pop it on, I'll switch it on and then switch it off. I'll just see if it's got any support or resistance in front of me. So let's get on and look at the pivots themselves, what they are actually, and we'll start off. I'm just going to pop on here the very first and the most basic pivot, just make sure I've got the right one there. So this is a daily chart at the moment, and here is the pivot. Now the pivot itself is calculated, the pivot point is calculated by the high, low and close of the previous period divided by 3. Now the great thing about these, unlike a lot of things that we do and look at in terms of indicators that are used in trading, is they're there, they stay there, they don't move. So these are monthly pivots on here I'm showing you. This is the monthly pivot point. It's there all month long. It's not changing. It's there right on the very first day of the month through to the end of the month when we get the next pivot in, or the same with the day. So it's from the first part of the day right the way through to the end of the day and so on. So the pivot stays there, which makes it an easy thing to trade towards or against or use as support or resistance, whichever, however you're using them. We'll come on to that in a moment. So what we're seeing here, as I said, it's the previous period, the high, low and close divided by 3. Is these pivot levels are calculated. So this pivot point, the pivot level here is the high, sorry, where was it? That was the high, there was the low, and the close was up here somewhere as well, and you can see it's up here. You can look at pivots and they'll give you an idea of a trend. Well, you don't really need to look at the pivots to give you an idea of a trend. It makes me laugh a little bit when you see this, because you can see the trend is up on that point there. You can see here the trend has come off. You don't need a calculation of a pivot or anything else on the chart to identify that. That's why I said reading price is the most important thing. Anyway, so where we're sitting but at the moment below its pivot point is seen as a weakness. When the price is above its monthly pivot or weekly pivot or daily, whatever time frame you're looking at, it's seen as strength. So this is showing as weakness at the moment. We broke below it last month. We pretty much it was the resistance point. Price stuck around it for quite a long time, but price couldn't close back above it. And here at the moment, this month to date, we still haven't broken back above it. And as you go through, you can look through all these levels. One thing you might notice is they do get hit quite a lot. Often hit quite quickly, even in trends, and trends in particularly, they may get hit very early in the, when I say quickly, very early in the period. They provide support and resistance, and just with this pivot on here, you can see the amount of times when prices come up there, it can't break the pivot point. It dances either side of the pivot sometimes. This is the great point here, where you've got price coming down, testing, bounced a bit, and then broke through that time, come back and tested the underside of the pivot. So you can look at, I mean, I'm looking at the daily picture here. If we can still use this monthly pivot using a 4-hourly and maybe get a bit more detail. So that's the pivot point itself. As I say, simply calculated, high, low and close. We don't need to do any of the calculations on any of these pivots. They're done for us in the software. So the next stage, we can now look at some levels of support and resistance. I'm going to just look at the first level of support and resistance here. So I'm looking at the R1s and the S1s. Now when you start putting these on the charts, all of a sudden, wow, hang on a minute, you've got resistance here, you've got support here, resistance bang into the R1 up here. Sorry, it's a little bit light on that colour, but you've got resistance right up the top here. It's come back right away through on this occasion. If it's starting to break down, well, where can we find support potentially if it comes down? Down here. Where did we find support when it broke through here? Down here. This is where you can see, as I say, potential areas of support and resistance, and that's all they are, potential areas. How is it calculated? Well, the first resistance point for the upside is 2 times the pivot point minus the low. If you really want to know, it's not really going to help you with your trade, but having an understanding of what it actually is might give you an understanding that if it runs up to its R1, it's still running quite strong, trending upwards, but doesn't mean to say it's going to stop there. It can find some momentary resistance, come off of it, but if the market's strong, it could push up further. Now, these are the first points of support and resistance around the pivot themselves. The market stays within these R1s and S1s for around about 80% of the time, so that's a good amount of the time that pivots will stay between those periods. So if you run all the way back here, okay, yep, it's popped out here and a few times here, but a lot of the time it sits between them. Another thing to notice here also is the pinched pivot, and what we're seeing here, where the market tightens 1 month, the pivots will obviously, with the calculations, be very tight the next month. So we'll see tightness. The pivots themselves will be on the squeeze. So you've got to use some common sense at that point and think, well, okay, I could see these broken quite easily. Okay, so we're going to move on then, and I'm going to pop in the next level of support and resistance, and we're looking at the S2 and the R2. Now the R2 is calculated, for example, by the pivot point plus the high minus the low. Simple as that. And the S2 is the pivot point minus the high minus the low. I knew you needed to know that. It's worth looking at how they are calculated, because it will give you an idea why some are further away than others and they're slightly offset. But when you start popping the extra levels on, it starts making, well, you can see the extra points where they do provide at least some resistance at times. As I say, I'm still looking purely here on a daily chart with a monthly pivot. We'll come down in a moment and look at the lower time frames, but it's all the way through here. Yes, they do get broken at times, and we'll see them broken. I've got stats on all of these, which I'll talk about in a moment, but price will hang around them. Let's just finally put the third level of support and resistance in. Now, you can see on this chart, you can go down to fourth and fifth levels. In fact, I'm going to put them all on for a moment, because there are times when price will get down here, but when I show you the stats, you'll realize that with the price staying 80% of the time between the R1 and the S1, the chances of running down to one of those others is pretty slim. So let's just go back to the beginning of the chart here. So you'll see here, the price is coming back up to the ghost pivot there. It's not actually made a great deal of difference, because most of the price action was already contained by the R2s, S2s at the most. So the R3s, S3s have much lesser probability of being hit. Now, whilst I'm here, are there any questions at this point? Because what I'm going to do next is look at the stats, but do you all fully understand the principles? What they are not is an absolute point where the price will never get through. They provide a point of resistance and support. The support areas are nicer when the market is coming up. The resistance levels are nicer when the market's coming down. I'll say that again. The support works more strong when you've got a good market trend. when the market's still in a trend, it's come down to its S1 here, quite pinched pivots on this point here, but the support has provided good strength here in an upward trending market. Resistance, yeah, just looking through here, downward trending market, resistance working not so much there, but certainly around this area here working better. Okay, ma'am. I got asked the question, why don't you show the labels on them? There you go. I don't need labels on them personally, and I find the labels and the price action and everything else on here. But there you go. Why don't I put them on? There you go. They're there. I've got them color coded. And I don't like all these. Well, firstly, I don't operate like this. I operate with just the more recent levels of pivots. I'll come on to that towards the end there, and I'll show you what I'm doing. I'm not interested whether it stopped at a resistance point back here, because the price is there. I don't need a pivot point and price to tell me the price stopped there. So, and I don't really need to know that's an R3, the writing R3, because I can see the pivots up and below it. But obviously, when you're starting off, you might find it a bit more useful. But in that case, I would suggest you look at less, otherwise you end up with numbers and things all over your charts. The biggest problem a lot of traders have is they have too much stuff on their charts, and it becomes very difficult for the brain to work it out properly. You might think it's easy because you know it all, but it's complex. It messes things up. You start ignoring things, of course, but then why bother having them there at all if you're ignoring them? So where it might come in more useful is if you've got an overlap of pivots. So if I put a quarterly pivot on here, but if you've got them color coded, you don't really even need to do that. So any other questions on the pivots themselves? I'm going to take those off because they offend me. If I can actually get them to come off, I just don't like, as I say, it's a nice cleaner chart without them, and I don't have so many pivots all the way going back. It's just really so you can see the strength and the weakness of pivots. Okay, so no questions. That's fine. Let's get on and move then on to some really key points here. So we've just brushed the surface, basically looking at what things are doing. Let's get on to the juicy bit, and we'll look at the statistics. Now, I spent many years, and I have a system that now calculates it all for me. But when you start looking at these levels, that you obviously realize they've got a great potential, but it's then looking at them statistically. Okay, I said that the price would stay between the R1 and the S1 for around about 80% of the time. How do I know that? Well, because well, one, visually I could see it sitting there quite a lot of the time, so I measured it, and I started measuring more and more data around the pivots. Nothing is 100%, by the way, but all it is a very good tool to use, and you'll notice that even if it's for a short while, most of these pivots will provide some sort of resistance. So when I say a short while, on a daily chart, a daily pivot, you may see the pivots closed above the trend line. When you're looking at the lower time frames, you'll see price running into a lot of these pivots. I say trend line, sorry, running into these pivots, reacting, and then eventually they fall over. So they'll roll over either way. But they're very easy to calculate. It's not like a lot of indicators like moving averages, for example. The problem when you look at a chart and go back and try or even a lot of the software that tries to do the calculations on things like moving averages, is the moving averages move. And quite often, particularly when you go back and you drag a chart back and see, let's say you're looking for a reaction to a 50 moving average, which is a very good moving average to use, and you're looking for the touches of the 50 MA. Well, what is a touch a month later on a daily, let's just look at a daily chart, for example, or a few weeks later, may not have touched at the time. The way that the moving average is moving hence the word moving, is that it adjusts itself. So we can't take a lot. Well, you've got to be careful that you're actually seeing in real time, or your software that's testing it can give you the ability to ensure whether it really hit or didn't hit. And we've got good. I mean, the software TradingView, for example, great bit of software for going backwards and forwards and doing back testing anyway, because you can look at it in nearly real time. Okay. Let's have a look at these stats, and let's look at the pivot point first. Now, these stats are largely similar regardless of the time frame until you get to the 4-hourly time frame, in which case the pure volatility in the markets and the tightness, closeness of the pivots make them different. For example, a morning on the euro, the morning pivot point on a 4-hourly chart, the one that runs from 8 o'clock time frame, has got something like a 90% chance being hit. Why? Well, before the pivots start, the price is normally consolidated around the price levels. They're a bit more consolidated, so when the new pivots come in, they're quite pinched, and it hits it around about 90%. In general terms, in the dailies, weeklies, monthlies, we got around about 75% chance of the pivot point being hit. For the R1 or the S1, now this is based on the euro dollar, by the way. I just took the euro stats here. Now some of them vary a little bit, and you might find this the other way around on a market such as the dollar yen, but this is the euro dollar, and it was in very much a downward. This is over the last 12 months, a rolling 12 months. You can see, well, largely we've been in a downward trend, so it's no surprise the S1s have been hit more frequently than the R1s. But already you can see there's a lot less chance of one or the other of those being hit. But wait, yeah. When you get to the R2s and the S2s, 15, let's say 17% chance of being hit. I normally round it up to 20%. In my mind, and then we've got 5%. Now I've seen it as high as 7%, and slightly higher in really strong trending markets it's more likely to be broken. Again, common sense. We're not, unless you're looking to be counter trending the market all the time, it doesn't matter if we're long and it's running through an R3. It doesn't matter, because it's going the way we want it to go. If we're trying to use the R3 to trade against where the market is, well, then there's a risk that you're trading it, unless the price action and everything else is all aligning. You're potentially, yes, it can provide resistance, but it can be broken. There's a higher probability that it will be broken if it's against a strong trend. Now, I've only put some of the stats here, but you can capture here. Anyone that's done anything on stats will realize that it's a bell curve that's sitting there effectively. And if you look at Bollinger Bands or anything like this, one standard deviation, and they're using standard deviations in that case, but one standard deviation each side would be effectively equivalent to the R1 or the S1, 2 standard deviations, or actually would be the R3 or the S3 if it was in standard deviations, because it's only around about around about 1 to 2% chance of the 3 standard deviations being hit. Anyway, let's keep it simple here. So these are the probabilities on those pivot levels, and this is rolling. I've been rolling this for years and years and years, and the 75, that is probably the lowest it's been. It occasionally has dropped down to about 73, but often it sits there to 80 and towards 80%. So it's got a good probability of being hit the pivot point. These others don't necessarily have such a good probability of being hit, but we've got to look then at the R1 or the S1. So coming back here, if I can put that back on, there we go. The R1 has got a 40% chance, the S1 a 47% chance. But if you look at either one or other of them being hit on a daily basis, it's got a 75% chance being hit. So that means if we're trading in a trend, it's hit the daily pivot, then the R1 or the S1, well, it doesn't have to have hit the daily pivot, but if it hits the daily pivot, that's a bargain. But if it's hit the daily pivot, it has a 75% chance of either hitting the R1 or the S1. If you, again, a useful stat to have when you're looking at pivots, if it's already hit the R1, the probability of the S1 being hit, or vice versa, is 12%. To hit them both at the same day or the same period is a low probability thing. Matt's asking me here, has probability stayed consistent since you started measuring it? Pretty much so, even when it gets really volatile. And the reasoning why the probability doesn't vary massively is if you look at how things are calculated, unless we had a really volatile month followed by a very quiet month, by a volatile month, and so on, then we'd see stats be, I think, a bit more thrown. But because generally you're having consistent, and the pivots of course are calculated on the previous month's action, it takes into account the volatility, the previous month's volatility effectively, so the pivots will always adjust themselves into the next month. Now sometimes that causes a problem because they're miles away. So if you had a real, let's just say that the Feds have done something, the central bank's done something, and it's moved the market massively in that month. They've decided now to get really aggressive, and let's say they put expect interest rates to go up to 6 or 7%. That's on the outside. That's not really happening at the moment, but that's not really happening. But it's something like that coming through would really move the market in that month, and it would leave the pivots for the next month massively wide apart. And on those occasions where you see them massively wide apart, what I do is and I'm not the only one, what a lot of traders do that are familiar with pivots is they'll look at the halfway points between the pivots. I'll show you in just a second. It'll be easier to see some of this, because what I'm going to do next is take these figures and we're going to go through some of the charts, have a look at what's actually happening, and you can see it a little bit more for yourself. So I'll coming back to that for you. If the main pivot's not been hit, let's get some key things here. If the main pivot's not been hit, the R1 to R2, so I'm going to come right the way back here. See the R2 figures and the S2? 15% chance of being hit in a normal day. But if the market's moving and it hasn't come back and hit the daily pivot, the R1 to R2 or S1 to S2, let's see if I got that on there as well. Yep, they sit around 75. Again, 75, it seems like a magic number. It's around about 75% chance of being hit. Again, I'm going to show you this on a chart. In fact, there you go, that's the end of the stats and that's the end of the slides bit. So let me now bring you into the charts. That's what I like to be the best. Let's just go through some of those stats in real terms. Pinched pivots first. Very pinched pivots on this month. The previous month we saw very little volatility. Well, through December. What do we expect? January we've got very pinched pivots. So we have seen those sort of. Remember I said the chances of an S1 and an R1 being hit on the same month, in this case on the same period, is around about 12%. Well, there you go. It's been hit that month. There's not sort of, it's not so frequently frequent when you go back through here looking for both to be hit. It really tends to be done. There you go. It's hit there again. Very pinched month. What month was that? Oh, December. There's a shock. Consolidation all the way through December. Tight pivots in January. So you just got to. I say take it with a pinch of salt. You've just got to use a bit of common sense. I know it's in short supply. I do sell common sense if someone wants some. It's very, very expensive though. As you come through all the way through here, you can't. I can't see any of the more. The blue lines are the R1s and the S1s. Just to make life easy. Can't see too many occasions where it's hit both. Even on this really tight month here, it didn't hit both. So there we go. That's that one. Let's go, so that's the R1 or the S1 being hit. Well, the R1's on the same day, both the R1 and the S1 being hit on the same day. Sorry. Now let's just look at R1s or S1s being hit every day. Well, this is hit on this day. Hit, 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 hit. Nothing hit on that day. And you start looking at it. Well, how wide are the pivots? And this comes back to the pivots themselves. They're quite a depth away from quite a width away from each other. You could be using the halfway mark between the two of them as a guide. Probably, if you did that, you're going to be pretty close. I don't know, pretty close to where the price came to here. But you'll find back in 2008 and 2009, I know I used to have because the volatility of the markets when the banks were crashing, etc. The market, they were so volatile. I'd pop in the midpoints. I had them programmed in at that time. But now they're just too noisy. So that's another aspect. A key thing here is how frequently the R2s and the R3s are being hit, because I see a lot of people come out with strategies of if the R1's broken, the R2 becomes a target. Now, yes, it's going to happen, but you go back to the stats and you got, let's just say it's 17% either side. You've got a 17% chance of the R2 or the S2 being hit. So it's pretty light. The times they do tend to get hit is when they're very pinched, or we've got economic data coming out there big time, which blows things out the water. Majority of the time that it just doesn't happen. So well, 80% of the time it doesn't happen. But that isn't to say when we get into decent runs. But what did it do here? If you notice here, it didn't hit the pivot, and this is where I'd like it, because if it hasn't hit the pivot and it's run into the S1, it's got a 75% chance of hitting the S2, and vice versa. So where it hasn't hit the pivot, that was the key thing on these stats. Now these actually, this hasn't hit the pivot this week yet, a month. But where it hasn't hit the pivot, it's got a much higher chance of running through the R1 or the S1 and hitting the R2 or S2. So very key points on there for you to take account of. Couple of questions here. When I say 80% of the time, are you talking about 80% of the day between the daily R1 and the S1? Well, 80% during the period, Michael. So if you're looking, I'm looking at a monthly pivot on a daily chart here. So 80% of the month will be between the R1 and S1 through that period mostly. You can just see, look, there's barely, well, certainly didn't go up to the R2, pinched through there, but in fact the closes, I've got so many stats on these things in terms of where the price actually closes. For example, on an R3 or an S3, and I can remember this one off the top of my head, hitting the pivot is one thing, closing above it is, instead of 7% chance of being hit, or I think it was a bit less in this current one, it's 5, but instead of being, let's just say 7%, it's like less than half of the time will it be hit. So sorry, close beyond it. So I mean, we did close above the R2 there. Let's just have a look at just a couple of examples. You see the S2 got hit here, but it didn't close below the S2 at the end of the month. It closed above it. So it's really just, you're just looking at putting a statistical approach to it. So let me just give you an example here. This is absolutely perfect in terms of it's run into its monthly pivot. It's in a downtrend. This is a resistance point. You don't sell it, or hang on a minute. I don't sell it the moment it hits a monthly pivot. I'm not a fool. They aren't absolute. This is where the market's going to stop. And as you can see here, we had another day where it pitched up, and the day after it pitched through that area. However, it did start then breaking down. What's it doing? It's putting high lows, high highs in. When it starts breaking below the low of that middle bar there, well then if you look at the smaller time frames, you might see something that's given you the reason to be saying, well, actually I'm trading with the direction of the bigger market, the structure of the market is down, let me look for short opportunities once it's failed. And on a shorter time frame, what I'd recommend is you wait for it to close below the monthly pivot. And when I say shorter time, I'd come down to a 4-hourly. So I'd look at this on a 4-hourly time frame and look for it to see when it closes down, or maybe a break here. It doesn't really matter. It might be that you run it down a little bit lower, but then you're looking for the probability of the S1 being hit, not the S2, the S1, because the daily pivot's already been hit. This has a lower chance. That isn't to say when you're looking at things, well, I need to take it all out here. But if I'm a day trader and I'm looking at daily pivots, I generally take all of the profit. I took 2/3 out on a trade we took on Monday, Tuesday, I can't remember, on the Aussie dollar. I took 2/3 out at the first level. Ended up closing the other part out at slightly worse price because it just found support into it too much. But you can, of course, trade beyond these levels. It's just that the probability of this being hit wasn't great. And anyway, how this then ended up closed above that's fine. Okay, sorry, Cravex, in terms of, I've never used Camarilla pivots to trade off. I know that everyone gets their own thing, and they'll take something and try and improve it, and make it work and work for it. It works for them. It doesn't really matter what pivots you use if they work for you. The stats that I'm quoting here won't be the same for all pivots because the way they're calculated is different. Fibonacci pivots are certainly different because you're multiplying by Fibonacci numbers. How does this work for scalping? Well, should we have a look? Let's go down to a 4-hourly chart. Now I'm going to have to change the feed on this only because I can do it on here. It doesn't really matter too much. But whilst we look at this, it's a good question in terms of, well, where does a period start? And that's monthly. It's easy. Monthly, quarterly, annually, all the numbers are very easy because it starts at a certain point. On a daily time frame, when does the trading day start? Now, I've sort of had to bear with it a little bit because the trading day for me starts at midnight GMT, because of course GMT is the key time frame. It's 0 latitude, isn't it, or whatever it is. Is it 0 latitude? Yeah. It's the start point of a day, effectively. Totally biased for it being Greenwich Mean Time. So that's the beginning of the day for me. However, it's not really for the trading market. The Forex market closes at 10, reopens at 5 past. Effectively, there is an absolute close there, which brokers don't show you too much, and you'll still get a feed and everything else, but it closes at 10 o'clock at night. So what a lot of brokers do, and this broker that I've got in the moment, I've used Pepperstone. Oh, no, it's FXCM's price here, but I use Pepperstone a lot. I just look for the good feeds, and both of those provide good feeds for for the charts, but where their time starts, and you can see on this clearly on this 4-hourly, is that they're obviously starting at 10 o'clock because their 4-hourly pivots are based from 6 o'clock in the morning, for example. But look, this is just using their pivots as they are sitting here. What I do is I change it. There's another broker in here that gives me gives me a different set of pivots, i.e. they start at 8 o'clock and not 6 o'clock, because that's when for me the market starts trading. So I tend to, if I'm looking at a 4-hour pivot, I come across here on this chart, and I've got City FS, I think it's City FX. I pop on their feed. Summertime affects pivots for sure. They'll start, they'll affect, but the thing is, time, you just adjust with time. So everything's adjusted, but yes, it can affect. Right, getting to the pivots here then, I'm just showing you a 4-hour pivot here. So your stats are different. The chances of an R2, S2 being hit is higher, is around about 15% higher of those levels being hit, and particularly the more frequent one that's hit more frequently. Sorry, but the first thing in the morning, the 8 o'clock pivots are generally, if you look at this, there's an 8 o'clock pivot, there's the 12 o'clock pivot. This actually isn't too bad, but because it ended up chopping all the way through the 8 o'clock, but generally the 12 o'clock pivots are higher. I have a little strategy that I've shown people for years. I think Mem, you use it. And it's really looking at the trend of the price action coming back, and it's looking at reaction. This isn't one at all. This could have been one, where actually, but it wouldn't be because it's 4 o'clock in the afternoon, so I wouldn't trade it then. I trade it between the 12 midday session, and I probably won't find one here. Here we are. We've got one here. It's not ideal here, but you're going to have to use your imagination a little bit here. If the trend, I mean, this trend was coming down on the last time frame here. Thanks. Yeah, it's coming down. It's broken through here. I just look for the S1 or the R1 to be hit. So it's preferably in trend. I mean, as I say, this isn't the best example from here, but there's the S1 being hit. Bang, that's it. So scalping, if I've answered that question, yep, you can scalp with them. Right, let's go back to using my other charts now. I don't care what price action on it. Actually, this now has changed the because I'm using a different feed. You'll see that the feed here starts on the new day. Whereas if I switch this a little bit, you'll see if I just use a different broker here, the pivot moves. For the dailies, I've just got accustomed to just using it as it is and just using the common. Be a common people, in the words of Pulp. Yep, S1s and R1s. That's where the probability sits on that very short-term trend trade. I use the same principle on dailies quite frequently as well. So if we come down to a daily pivot, so I need to come down to an hourly chart to look at a daily pivot. I've got nothing on here at all because I've taken everything off. So if I put my daily pivots on here, then of course I've taken everything off them. I can put them all back on now. So if we pop them all on there, back on. Okay, so same principle on the dailies. I don't go counter, so I'm not interested in these moves from the daily pivot upwards when the market's been coming off like that. I mean, it's horrible days like this, so there's days I certainly won't be doing it. And as much as this all went nicely here, I wouldn't have been doing that because the market was running up at the time. But the principle is pretty much the same. So you're looking for where the market is running in your favour. And this euro dollar's been horrible and choppy, and it's been the ugliest market I can remember the euro for a long time. But there are other good examples. I'll give you an example we took in the trading room this week. It came off the 4-hourly time frame on the Aussie dollar, for example. So got no pivots again. Oh, because I took them off. Let's put them on here. That's the dailies. I want the weeklies. I've got to have to change this. It's all right. When I close Trading View down, it changes my pivots. Now this is an important thing. I've already mentioned it actually, but you ideally want a pivot that suits the time frame you're looking at, but you can put them all on. Trading View, this pivots, the standard pivots come on and it's auto. The problem with it being auto, in fact, it works okay for this because it gives it a weekly, but it gives you a weekly pivot all the way down to 15 minutes, which is no good for me. I need a daily pivot on when you get to the hourly time frame. Maybe I'll ask them to change it. So I change it. I manually override the pivot here, but I can put loads of layers on mine. There are some pivots out there which allow you that you can get from other people that have got if you're using Trading View and you don't want another indicator and another indicator. I've got piles of them. I pay the premium. It's cheap in Black Friday. Anyway, I've got the weekly pivot on there. That's fine. Now I didn't save the let me just change and pop these things on the bottom because it saved it without them. I don't normally have all these hidden up. Don't really need all of these hidden up. So Australian dollar 4 hourly. There I am looking at. It was actually on a monthly pivot, wasn't it? After all of that, there we are. So look, price action. What's it doing? Lower highs coming through. We've already got that in. We've got another wave down here. Consolidation. What's it likely to do? Continue in that direction. What have we got below? We haven't had the pivot hit, but what's happening here? Price structure. We traded this. This was just a simple. I expected this to be a swing. It happened in a day. Well, the original target happened in a day. So there you go. That's how you can use it for a swing, which I expected it to be. I was coming off the 4-hour charts. Let me see if that's on there. 4-hour charts. Where are we? Where was it? Am I looking Aussie dollar? Where was the trade? What day was it on? That was on Tuesday. So Friday, Thursday, Wednesday. Oh, there it is. Silly. That's Friday. No, it wasn't. That was a consolidation. Monday. Oh, sorry. I just realised it's sitting here on a weekly chart. I'm looking at 4-hourly bars here. Of course, it happened here. There it was. There it was on Tuesday. It's a 4-hourly bar, and it broke the lows there. It did everything else. Okay, it hit the pivot, and the S1 in this case hadn't on the dailies. The bigger picture I was trading for a swing, so I was ignoring the weekly. I couldn't care if it took went into next week. Didn't really care. But there it is, and it just went through. Here it went right the way down to the S4 and danced around the S4. Why didn't I care so much about these pivots? They were pinched. Yeah, thanks, Craig. It's all right. I go a little crazy at times when I put 4-hour pivots on. I forget I'm looking at a weekly chart. Anyway, so there was the run from what we were doing. Okay, sorry, I just realised I've switched that there so I can read what's coming through on there as well. Do I set limits? Okay, and Matt, no. Well, yes and no. Do I set limits at the pivots? I assume you mean do I set the orders around the pivots? When a massive word of warning here. The stats and everything are brilliant, but let's take this. This is a great example here. It didn't hit that pivot. It's 75% chance of that being hit. It never hit it. How close did it get to it though? Massively close. I did start doing some stats on plus and minus 2 pips, 3 pips, and so on. The thing is, whilst I use a system for automatically calculating these for me these days, I never trust them in the first place, so I always manually do them first. And to go manually back and do all of that was just a headache, really. But and particularly over the number of currencies. A question that hasn't been asked so far: do I trade them over all the currencies? All the currencies I trade, yes, I'll use them. I've got them on the chart all of the time. What we're going to do in a moment is to finish up with in a few minutes. We're going to, one of you guys is going to pick a currency. I'm going to go back to a date as far. I can only on a daily pivot. I can only go back as far as I think it's October. It gives me data for. And then what we're going to do is apply reading price and pivots together, and so you understand the structures of the market, how they develop, where the pivots might or might not come into play. Here, as I said, you've got to be setting your targets less than the pivot on each occasion if you're using them for limits. Even on that, this is it, the Australian dollar here, when I'll come back to the daily pivot there. So daily bar rather, monthly pivot. My first target was not on the pivot there. It was at 65.90. It's behind that, below a whole number as well. But because the pivot was so far, look, it was the pivot itself was sitting at. Oh, for one occasion, I will put the numbers on here. And come back. There we go. So we'll show the prices there. What was the price? There it is. 65.70. So it was quite a bit below. Now it did come and catch that, but I'm when I'm trading, I'm not looking for the last pip all of the time. I'm not looking to be the first one into a market or the first one out of a market. Well, first one out of the market, I might be that sometimes, but certainly not looking to be the first one into the market. And I don't need to run it towards the absolute end. Now I'm going to take those labels and things off again for now. Yep, Josh, you use the Fibonacci options. Yeah, look, they're all amazing. To be fair, there isn't a great deal of difference in the bigger time frame way how these things work. The calculation is pretty good there. They are very good. As I said, there's a lot of auto systems out there, algo systems, traders using them. Just looking at this chart here, it's not cherry picked, it's the Australian dollar I've picked up now. Look at how well you find support and resistance here. See, this is a frustrating bit. Sometimes you get the pivot missed, but okay, look, on this particular occasion it didn't come back and catch the pivot. But what can you do? Well, you can put a stop above. If you got the signal coming in on the lower time frames here, you can still put the stop above the pivot, but it gives you an idea of where to put it. Sometimes you'll just miss out on some of these things, so realistically. Counter trending, look, you can counter trend again. If you're targeting back to it, don't forget that pivot's already been hit, so the stats are different. So when you're retracing, but I have stats on closing within areas. They're a lot better for the R3s and R2s and the S3s and the S2s. Crikey. Sorry, I'm getting a question here. Talking about setting your orders, like on Wednesday, Euro were all short. Would it not have been to set a stop once it hit the daily pivot to catch both trades? This is. If I was buying, entering a trade, I don't trust the market that much. This is actually, here's a good example where I don't trust it just to buy it and put a buy order even a few pips above there. I ideally want to see the thing happening. Now you can, and I'm sure there'll be a lot of people, but this could have just carried on going. And why am I saying that? And then I come to price structure and what we just covered on that, and that's why it's so important. So here I would have missed out on, if I wasn't around, I would have missed out on this, but it's a daily chart, so I'm sure I'd have got in at some point. Could have got in the next day, it didn't matter. But if you look at what was happening with the price structure, high lows, high highs through here, so it's bullish. However, big caveat in the however, look at what the price action was doing up here. What did I talk about? The second or third point, I talked about trend lines, but then I also talked about the retracements that we see, which in turn some of them turn into divergences, and you would looking at the amount of and the frequency and the depth of these retracements, that could have been a market that was turning. So I wouldn't just put a buy order there. I'm a real trader. I could of course say, yeah, you just put your buy order there and you make a mint. But I want you guys to make money in the markets, and you don't do it that way. You can do, and sometimes this one's worked out. Now here's another thing. Whilst we're on this subject, is it didn't hit its monthly R1, didn't actually hit the monthly pivot either. What did it do though? It hit the monthly one after the event. So if you look at where price runs post the pivot's finished, it doesn't mean to say it stopped because the pivots have changed. You can still have that as a target. That can still be a target even into the next month. as it happens, then you got the next month the R1 came in, and you might have said, well, okay. And don't forget, I'm looking at a target slightly below. It may be that you just say, well, okay, I'll accept that R1. So yeah, there we go. Right, someone choose me a currency pair. Quick, first one there will be the currency pair. We go. Oh, Michael's there. Pound CAD. Oh, what a ugly looking thing. So what I'm going to do here, we're going to change to a daily bar. We're going to put the pound CAD on here. I'm not going to do it yet though. I'm going to firstly, I'm on it. So what I've got here is not. So I'm looking at an hourly chart. So I'm not going to go, and I'm not going to go up and down the time frames. I'm going to build it all from what I can see and only what I can see. So assuming all I've got is price and pivots, I'm going to show you historically how we'll trade it. It's all right. You're too late, guys. You snooze, you lose. Michael must have been sitting there with his finger already ready to go and press the enter button. And the pound CAD must be the ugliest chart going, because Michael's probably thinking, I'll get you. But don't worry, you can do this in your own time. And it's a really good exercise. Now what I've got to do is, I'm not on that currency yet, but I'm hoping I'm going to set it back in the range. Someone's going to tell me you can do it an easier way than that, but I'm going to set this currency back on this time frame. Go to. Now it's not got any pivots there yet, so that's okay. Oh, in that case, I can pop the correct currency pair up first. Sorry, what did you say? The pound CAD. Pound CAD. Is that going to give me at the same place? No, it's not. Right. Go to 31st October. Go to. There we go. So we've got no. So I don't know what's coming yet. So I can't do this until I get some pivots. So I'm just going to drag this along until we get some pivots, and then once we get some pivots, it's going to be soon. He says. I've got the pivots on this chart, haven't I? And then what I'm going to do is hide up the other side of the charts. Now, I did $1 trillion last year, Ben, not this year. Oh, come on, pivots, where are you? Why are the pivots not showing? Pivots, traditional daily, I've got them switched on. I'm on a Pepperstone chart. Why are they not showing? Right. So I just flicked it back to the end there. I don't know why it's not showing me. Let's go to November the 30th and see. It's not showing me pivots that far back. So where are the pivots starting to come from? Oh, here we go. Right, I can do it from here. So what I'm going to do at this point here is I'm going to now not create an alert at all. I'm going to do a bar replay. We'll stick it here, and we can start looking through this market from this point on. Okay, so what we're doing here then, this is where we're going at the moment. I've got the bar behind there. Let's just look at what we're doing. Look what the market's doing at this stage and what running into this market. So we've done triple tops, etc. Retraced here, sold off. So the structure of the market, from what I can see at the moment, is a bit towards the downside. It's come up. It's put this ugly price action. I reckon that's probably news. I've got no view of news what it's doing, but that could look. It's a Friday. It's non-farm payrolls come out on that day. Friday, the first Friday of the month. It's got non-farm payrolls out there. So not a great trading day. Let's move on then, and just one moment. Sorry. There we go. Sorry, I've got a distracting person on YouTube. Just for some reason, they think they need to come in and talk a lot of nonsense. So The question is all about money, of course, because he's one of these guys, judging by the picture he was showing, he's probably about 15 and got no games playing at the moment. Anyway, on that note, I'm getting like Ricky Gervais there, insulting my audience. You can only say what you see. So moving on, let's have a look at what price. I'm going to slow this down. Right, we've got the new day in. It's heading south. Picture here, it's without knowing what the new non-farms were there. Obviously, there was some sort of the actual move happened at 3 o'clock, so the surprise would have come out earlier. But we can only take what's happening here. What I can see at this stage then is I've got an untouched daily pivot, 75% chance of being hit. If this is a turning market, I really want to be buying somewhere around that pivot up to the R1. If it comes back, if it runs up to the R1 first, then I've got a consideration about the R2. What's it doing? Okay, so it's come back pretty close to its daily pivot. I'm not overly convinced that I might even let it go for a day here, but it could be a buy there, but I probably wouldn't have done it. Again, there's news. There's a 10 o'clock bar, so it wasn't news at all. But it hasn't hit the pivot. But you can be looking at the smaller prices. I probably wouldn't have done it. I'd have probably left it. I don't know if I did do it. Having said that. Moving on, so we're going to move into the next day here. Right, pivot's already been hit. The R1, look, high lows, high highs coming through here. Bias has got to be upside. Now the pivot's been hit 10 o'clock at night, so it's the new day in forex terms, day starting at 10. Then I'm not around to trade any of this here, so let's be logical about this. What am I seeing there? Where are we in terms of time? It's 4 o'clock, so 5, 6, 7. That's the other thing is, I can only trade when I'm trading. I don't take any trades before 8 o'clock in the morning. So the very first trade I'll be looking at is 8 o'clock. Now what I've seen here, I'd be bullish from what we've had here. I'd be bullish on the break of the 8 o'clock bar here, looking at the R1. So that would be my bullishness. Now. I would have been stopped on it, realistically. Blinking, it's my least favourite market of all markets as well, the pound CAD. I don't know why you trade it. Anyway, there we go. It's a mess. Oh. Next day, what time we're running into? 6 o'clock in the morning. Look how tight the pivots are pinched here. Difficult. There we go. It's turning the other way. Wouldn't be trading any of this. What time is that bar there? 8 o'clock bar. I wouldn't be trading it. Why? Because the trend is still upwards at that stage. What's the price doing now? It's starting to put, well, God knows what it's trying to do here. As I said, it is probably one of the best markets to avoid. Why, Michael? Why the pound CAD? You're going to tell me you trade it, intraday trade it or something all the time. Just looking at what's happening here, pivot's very pinched. The great thing is this is an hourly chart I'm showing you here, and you have a lot of time to decide on whether you're going to take a trade mostly. Well, up to the point of actually when it triggers. If you're looking at an hourly point and taking off an hourly point, you've got a lot of time. It may be very little time in a few minutes, but when it's getting close. Okay, next hour comes in. What's this market doing? So we look at the structure of the market. It's chopping sideways. I'm not interested in this market. I wouldn't even be looking to try and trade anything off it. It's going to be somewhere between its R1 and its S1. It has absolutely no use to me whatsoever. I don't care what the pivots are doing. It is just an ugliest market going, and don't trade it. Again, consolidation. So now some people will go buying into the or selling into the S1s. The daily pivot had already been hit back here, so the probability is not good on me. Here, the Swiss yen would have been much better, Dean. But it's a hell of a mess. The whole thing is a mess. When you come to markets that are trading like this, I'm a day trader predominantly, although I like swing trades. But whether this would be in a monthly pivot, a monthly chart, or whatever else, I would not be trading it at this stage. And this is where you get sometimes glued to the pairs that you're trading. This isn't a good market to be trading at this time. Now, hopefully, I'm thinking the EuroCAD. You see, EuroCAD is one of my favourite markets. Ironically, works better. So obviously, this is going to come good for me at some time. But all of this stage, it's given me a mess. It's in a consolidated period, so I might as well just let it run for now, till we can start seeing a trend coming out of this. The CAD's been awful this year at times, though. And there's absolutely nothing here. It's really not doing any favors in terms of you learning anything from pivots either here. In fact, sorry, I just have to. We got a trend coming, maybe. Okay, it didn't even catch the daily pivot, but it wouldn't have mattered. What time was that? 6 o'clock, 7 o'clock. So by the time I'd be into that move, it would already be into the R1. It wouldn't be a trade for me. Now we've got a structure appearing. It's got higher lows coming through, higher highs coming through. Hopefully we're going to get something that makes it look a little bit better coming into the next day. Right, so coming into the next day, it's a bit early yet. We're not out of bed yet, unless you're old, in which case it's 3 o'clock and you're out for a quick return. I'm looking at, right, it's right up to 12 o'clock in the daytime. It's not happening. If that retraced back to the daily pivot, for me that's the buy point for the R1. It's not happening. There's no strength in this market in terms of upside. The price action's awful. I'm not going to do too much more of this market because I wouldn't trade it. Look how pinched the next set of pivots are. The next day's pivots are. It's literally flatlined through that point of view. In fact, I think I'm wasting my time on this. Right, who had another market? It's just not. US dollar yen, Andrew. I'll take yours. It's just not worth trading it, guys. Can you see trades in it? No, it's just awful. So let's clear this off because yes, it might have come good, but when a market goes like that, it's just not worth trading. Let's change markets. And so what did you say? Andrew said US dollar yen. Let's have a look at US dollar yen. It's not my favorite either, but we'll do it because I do sometimes trade it. Now we've got it in the daily time frame. Let's just go back as far as we can. It's about 30th of November. See if it's got anything back there. I've just clicked on the wrong button there. Let's go back again. Until we get nearer some pivots. That was a move, wasn't it? Okay, we've got some pivots here, so I can put the time, the bar replay. We'll stick it on the beginning of the pivots. Well, that's weird. Why is it now giving me pivots all the way back? Oh well, we'll take it from where it is. Classic move if you're up at 1 o'clock in the morning here, kicked off, but not for me. And if you're looking at trading this around the world, you need to look and see how. I mean, there's opportunities. One thing with the yen, of course, the news events and whatever else come out during the Asian session, so you'll probably find more missed trades on this pairing than anything else. But we can carry on looking through it and see how it runs. But this in the right time of day, and when I say right time of day, 8-9 o'clock. 10 o'clock time maybe, this is what I'm looking for. This is the sort of thing, but it's got the higher lows in there. It's a bit limited on the structure maybe. Okay, so market Just running through the markets, watching this. It run up to its R1. I didn't give you a stat. I should give you another stat then if you've got your pencil ready. Chances are actually, and of course this one's done it, but if it's hit the R1 first, the daily pivot has a much less, it's around about 20-25% probability of being hit. So if it's already run up and hit the R1, the main pivot point has a significant lower probability of being hit. Okay. Pound Aussie's okay at times. Sorry, Michael replied to me and I missed it. He likes trading the pound CAD and pound Aussie. Pound Aussie's fantastic at times, but again, I really question those two pairs. But if you like them and they work for you and you're making money, that's all that counts. For me, I wouldn't touch them most of the time, a barge pole. Particularly the pound Aussie. It's very nice at times until it gets into these horrible choppy areas as well. Right, sorry, getting back to this US dollar yen then. Okay, just carry on playing through here at the moment because it's getting a new. Oh, slow down, So this is one again. It's the structure of the market is up. It's obviously had some news out here. Oh, here you go. It's non-farm payrolls or whatever happened from the non-farm payrolls has come out. So it's affecting this market just the same as what we saw before. Ideally, if the market had been coming off, I'd be selling into this pivot. It's running up towards the pivot. It's not a trade for me. Right, whoa, too early in the morning. It's not one of those markets. It just literally, it's near enough done anything. It's flatlining. One thing I would stop this at this point for a moment and just say, you know, when the markets are doing this and they do this for long periods, you're not going to be sitting there in a trade. You're going to be sitting there in cash. If you've got all the markets that you're looking at doing the same thing as what's happening here, I don't care whether you've got pivots, if you've got the Holy Grail somewhere. The Holy Grail trading is becoming a broker, I might add. So because they're taking 18 to 90% off of retail traders all the time, so that's where the money is. It ain't sitting in here in markets like this one. So you just got to, during every day in my trading room, first thing we do is we look through all the markets and I work out those that have got the best shape. Now this would be thrown to the side. It's certainly better for the Asian session, Ben. Because it's where it's running. But saying that, if you'd been looking at this, would you be shorting? It's not really enough definition to, and as I said, structure is so important, and it's not really got sufficient structure in this move. We haven't got a lower high, a proper high, lower high confirmed through on this time frame. It didn't break the low there, so there's no structure in this at this stage. We'll leave it running for a moment though. See, this again. Why do traders lose money? I could do a session on here. It's because they're trading these currencies that are really not that great in our time frames. This is just running through. Okay, we've got structure now. We're getting some structure. It's come out of this consolidation phase. It's rolling down. I'm looking for short side trades on this. Okay, hit the S1 first. Now I've got rules about the S1 trade, but it needs to hit the S1 then pull back. What time of the day is this? Okay, it's gone beyond my. Again, I trade between 8 and 3 o'clock roughly is when my trades are going to be taken. This is running out a bit low, but if it was in time, if it hits that S3, I'm looking for it to come off the S3 back in and then break another time. So I want a bit more than just because it could be just over. In this case, well, I don't know. It might have done it the next day, but no, it didn't. I'd have been probably stopped out on it. But if the point is, it can just overlap the pivot. As I said earlier on, we've gone into another flat market. Someone give me a decent market to trade. Look at it. Tight old pivots. Next pivot's a bit back to normal. Okay, This is a market you don't trade on when it's like this. You're in New Zealand, Andrew. Yep, makes sense. But it doesn't matter where you're trading it in this current stage of things, because yes, it's hit the pivot here and run up to the R1, and it's very tight, so it's run off to the R2, etc. But it's a market that's really ugly. Now, I appreciate that sometimes you get the 2 o'clock and the 3 o'clock that work. The DAX is in a chop, Ben. Have you not seen it on the dailies? For months now it's been sitting there chopping along. Again, sorry, I'm talking about price and pivots. Price is the key thing. If price is just, if we go to the DAX, we'll see the same thing as what we're seeing in a lot of other equity markets at the moment. Is they're going pretty sideways. They're difficult to read, and traders aren't worried about that. They just want to trade what they trade, and if they trade the DAX, they want to be trading the DAX. Sometimes you've just got to go further afield, or do something differently, because that's the times that you get your drawdowns. Hey, Mem. See this market? Can you see any structure to it? Really, all it's doing is range bounding. It's not a market I even want to be looking at. I'm going to have to look at something that's going to be giving us something a bit more movement. Now I can of course click on here and it might make it look a little bit better. let's give it a go. I just realised it was so pinched up there. There might be trades, but it's still very flat. The structure's not there. I'd love to say, well, we could trade that down to the S1 or whatever else, but really looking at the price action, is it really giving us that clue? This has already run off and pretty much hit the S1, so any move back to this pivot with the lower highs that are coming through here are not so interesting. Pushing through, running into the S2, sorry, R2, R1s. Now, what time is it? Still only 3 o'clock on this market. God, it's ugly. Trying to catch it somewhere like in the London market. So, again, no direction in terms of where we're going. It would look, or it might appear that it's going to go downwards, but it's just chopping. Where are we in what month? 26th of January. Okay. This is not, as I say, not tradable. You can't do anything at all with it. I don't know why I left it to you guys to choose something, because you're choosing markets. One, I don't trade very much, but two, they're horribly choppy at this stage, and they've not been in a tradable zone. This, as I say, this is the importance of what I do in the morning sessions in the trade room. We spend the first 45 minutes, or start the first 15 minutes on YouTube every morning. I start looking and analysing charts or whatever else more so, but we go through in the room and we look for the best opportunities. And at this stage here, I wouldn't want to be trading any of these. Why? Because they're not clear. I can't. Grey Wolf. Oil's rubbish. It's been chopping for goodness how long. Gold's working the same as the euro. You could trade the euro dollar and look at it on the euro dollar, the pound dollar. Markets that are going to have some sort of volatility have got a better chance on it. Even the euro CAD is a better market that's been moving of late. But you have got to pick your markets in terms of what you're trying to trade. I don't care whether it's pivots or anything else, because what strategy is going to make you money on a day like this. And I'm looking at an hourly chart, and I'm an intraday trader. I can't see too many strategies that are going to make me money on days like this. So I'm just looking through. Yeah, you can say, the thing is, it's all right if you're Harry Hindsight. You say, well, yeah, we sold on that point there. We put the stop over there, and we sold it down, and we took the profit there. Reality is, it all comes into play. Okay, it's 9 o'clock. It's a better day. But what was the market doing before? For me, structurally, it's a mess. And I've just got to stay with my own key rules in terms of I've got to have a market that's got some sort of structure that I can follow. Otherwise, I end up as part of the sort of 80% are losing over the bigger time. Pound yen, we can give the pound yen, but again, it's going to have the same sort of times. We've had some trades off it of late. It's going to give the same sort of moves as the dollar yen to a degree. We'll have a look at it for you. Let's have a look. Okay. It's not something I trade a lot. I do have the occasional trade on it. Pound yen. What I didn't want to do here is cherry pick. See if it will take me right the way back to where it was. Is it going to take me right the way back? Oh, it's okay. I need to, but at the same time, I do need a market. I do cherry pick my trading days. See if this will work. There you go. It's given me pivots as soon as I put the line there. It's immediately given me pivots. So I've worked out something from this. Okay. So chopping like trend, lower highs, lower lows. This is looking quite nice. Not for this particular day because the pivots are quite pinched. You can see how close they are, but let's see what happens from here. It's going to change direction, isn't it? Okay, pivot. Just looking at the price action here, it's been working quite nicely here. It's put another lower key lower high in this price action, sold off here. Pound yen might have been a better cherry pick. I don't want to cherry pick though. I just need. But the importance, what you're seeing here is you can't trade them all the time. And it's probably got more worth to you than if I had cherry picked a currency pair and showed you how easy it is to do, because it's not easy when the market's doing this. So this is real in terms of what we can, as real as it can be without trading. Oh, pause there. Still structurally here, it's still going choppy sideways. It's hit the pivots, hit the S1. It probably, what time was that? It was too late anyway. Wouldn't have had any risk reward sitting in it. CGM pairs, they're just not a lot of the pairs. I have personally recently been sort of scratching my head around trades in the mornings quite a lot. But I thought if we rolled it back to as far as the pivots would show me here, we'd have something sensible. But what's the market doing? Just pretty much chopping sideward. Sorry. Don't blame us. Sorry, Andrew, I'm not blaming you. They just named a market, and that is, I used to say I think there's more value out the fact that, oh, stop there. No. Carry on. Of seeing how things can't work very well at times. This particular occasion, look at 10 o'clock at night, it's starting to develop a trend. It's looking pretty okay for me. By the time I get to trade this at 8 o'clock, 8 o'clock in the morning, I don't trade before 7 o'clock because we get these we get these. Look at that! It's just literally running, taking the stops out above there, rolled over. It's not true necessary volume coming through there. Okay, so we had some news off. Oh, it's 13th of December. Let's just click on the side here so we can see a little bit more. So this hit the S1 first. Probability of that pivot is hit it, but the probability is too low for me to take trade. Whoa, stop here. Oh, okay. Didn't stop it quick enough here. So you got, if anything, you've got a bit of a flag going on here. I'm really scratching at trade ideas here. But again, here, it's my turn to start coming into these markets. 8 o'clock, where the stop would have to be down here. look, base it on the 7 o'clock bar, even on the 7 o'clock bar coming into 8 o'clock. I might have got into there with a potential if it had been in a better trend, but it's horrible. Again, the importance if you did take it of not trading it through to the R1, you just take it short. Give me some direction, market. If we come through to February, we know we haven't got any direction across these markets. Right, oh, this has already done everything. It's late in the day now. It's 6 o'clock at night. So there you go. Nice bit of yen chat out there. So we're coming in through Christmas. Don't trade through Christmas. So ignore all of this. I'm going to just let it zip through here. Notice periods I don't trade are just why would I want to be trading Christmas Eve, Christmas Day when the volumes are light, and again we've got consolidation and no real direction. Still 22nd of December. So some better moves than what we'd seen. Early morning going counter, but it's all counter now. This is starting. Here's the S1 to S2. That's fine, but only if you're in Asia. So, or the Asian regions and stuff. So, Andrew, you can see how many times these go off really early in the morning. This is nice and structured. S1's a bit close and it's very pinched, so you could look for more of a target from there. Right, stay still for me. Okay, so we could be coming up here. We've got a higher low coming through here. We could start getting through something a bit better. Are we going to get some sort of trend in this? What day are we in? We're starting to come into January. So the first, second week of January, it's still chop for most of the time. This is why it pays to play a number of strategy currency pairs and look for what's giving you the best price action. And it certainly isn't this one at the stage. Now it's all well and good saying, oh, you could sell it off the pivot there and run it down to the S1 or S2. Apart from Andrew and a few other people that are in Asia, there's not too many people that sit around at these times anyway. And it's counter trend. What was the structure of the market? It's up. Of course, it's inevitable it'll play off here when I'm just running through them here. We're getting a structure here coming through. Pause it. So we've got a structure, we've got a bit of a flag appearing, so you've got the bigger movement here, we've got a bit of a flag appearing. It could be breaking of the 156.32 area here. We would have so this is how I would look to set it up in the mornings. We'd need a stop of 73 to make potentially 83. It's pretty poor, isn't it? See how it structures. Could possibly get away with a stop at 66, but you've got to put the stops where they need to be. Let's just let it go for one more bar. Okay, so what time is that? It's 11 o'clock in the day. Let's have a look at the break of the lows here. So it might just around about 54 pips if it gets down there. It's got about 99, so that's a reasonable risk reward. If it breaks the lows there, then that would be a potential short position, and it would have probably been triggered, and then it's gone ugly and stopped, and it's doing what it does so well and gone completely the other way. News events again, that's 18th of January. This is another market. This is why you pick your fights so well. It's a horrible market. So if anything, all I've seen so far there is a potential loss. Actually, I missed that one there. But again, the risk reward wouldn't be right on it in terms you'd need to stop down here. You'd break it's broken through its R1, pulled back below, and then started running off towards the R2. The R2 becomes the obvious target, but we're looking at the risk, it doesn't pay off. So I need at least a 1-to-1. I know a lot of people trade below those levels, but I really need that sort of level to be there. Okay. I've got a feeling I'm wasting our time on this because it's sorry. Even here the structures only just break into the low side here, so we've got some structure coming into play, hopefully. So the next day, hopefully, we're looking at shorts. Not from there, we won't, with the pivots pinched, and it's given a higher low now through here. It's gone completely the opposite way. It's going backwards and forwards like a yo-yo. This one went really early, he says, and it's structurally bad. What time was it? 7 o'clock, so 8 o'clock would have. It's done what it needs to do, but for me it's structurally wrong. So I just don't pick these trades up. It's like this is probably would have been a slightly better potential. So it's 7 o'clock, so into 8 o'clock. A bit ugly though, and just ugly. It's just so flat. It's gone off and done what it should do. Let's kick this back in. I'm afraid these ain't working out, but they're just not tradable pairings for me. So I mean, this is all done before we're done. Ooh, no. See, I'd be looking for the long side here. What time is that? 6 o'clock. Oh well, that saves me anyway. So it's not set up here. It's rolled back over. It's starting to structurally come through. If we go back and look at what the upper time frames are doing through all this, and when you're starting to do your analysis, don't start on an hourly basis. Start on the dailies and see if you've got any trend in the first place. If you haven't got trend, don't even waste your time looking at this sort of thing. It's just literally pig's ear, basically. Okay, if during the time then we're starting to structurally going up, right? See, there's why you don't buy into the pivot. Structurally looking better than what we've seen here most of the time, and well, news come out there 7 o'clock in the morning. News, don't know what that was, but some news is coming out there. Doesn't really matter what it was because it would have destroyed any idea of trading, but it would have been quite nice for the upside there. But again, now we're in this mess, complete mess. Right, so we're running back here towards the pivot here. So again, we've got a bit of structure showing there. Maybe if it's in the London session here, just running through. Right, so it's starting to look a bit better. 6 o'clock, so we've got another 2 hours, another 7. Whoa, okay. Sorry, I can't stop it quick enough. So nice flag sort of pattern. R1 would be target from this point of view. You're looking at taking a trade post 8 o'clock where it's pulled down before 8 o'clock. You can see the price action at the end of 7 o'clock buy, it's pulled back. So we can wait for the 8 o'clock break there. We've got time to trade it. You're going to be risking around about 61 pips. Targeting, if I can get the target on the right place, about 108 17, somewhere in that region. See what happens. Probably foul. There you go. Hurrah! There you go. That's what you're looking for in terms of you've got structure in the price action. Everything is aligned on that respect. Nice bull flag for the flag traders out there. They work so well. It's one of my favorite patterns. It's just perfect, this one, and off it's gone. But for a lot of the time on this market, what date was that? 14th of February, Valentine's Day. So for a lot of time in this market, it was running. Okay, it's been too choppy. Where are we sitting here? What time? Sorry, I'm just looking at the time frame. So okay, there you go. That saved us some money, because I would be looking at the run back up to continue up to the R1. What's it done? It's given us a lower high by breaking the low in between the Asian session, so it's forgotten, and the trend is up. So it's almost a lesson how to not lose money, as opposed to anything else. There's one winning trade that I've seen out of all of this. Okay, we've run through it very, very quickly, but look at this dead flatlining again. Just click on that a little bit so we get a bit more depth to it. There we go. So again, we're in the what I refer to as a bit of the doldrums. Bigger picture, I can see some upside appearing here, so we might get something coming through. But whoa, again here, what's it doing? It's chopping. Horrible time. Chop, all chop. No, I don't care whether it does run up to the R1. It can do as much as it likes. What time did that actually happen? 9 o'clock in the morning. Beautiful move, beautiful move. So obviously some UK news coming out there, and off it's gone. But realistically, with what was on offer before then, well, obviously there's news coming out which you needed to be aware of, and probably shouldn't be taking the trades into major news stories anyway. So again, it's one of those that you'll get people that are less truthful to be suggesting, well, yeah, you just buy there and off it goes. It's not the case. You don't trade on the day when you've got such it's obviously significant news to move the markets that much. But what we are getting is we're still getting the movement and the market into trend. Now we'll see how this develops. If this pulls back into the pivot come the next day, we've got the long side again. Right, okay, it's dancing around here. What time is that bar? 10 o'clock. So it's dancing around, it's consolidated here, slowed off, dancing around here. We could be looking at a trend line, it doesn't really matter, but we're looking to buy towards the R1. It's not happening, that's definitely off then. It's gone to the downside instead of the upside. By having the rules in terms of how you're looking to buy it and what you're looking to buy is actually saved us more money in this market than anything else. So we haven't, I think we might have had one loss right back in the early stage. We had the one win in this, but it's a market that's just not shaping up right. This is how you got to trade, or I say this is how you got to trade. You've got to leave things alone sometimes. Just because this has got back to the pivot, it's not a buy up to the R1. Stats are good for the R1 or the S1 to be hit. This particular day, well, it looks at this stage like it's going to run down and hit the S1. Didn't even do that. Did eventually, got pretty close to it, but it's against a major structural change movement there. Okay, I think I've well, hang on. Are we getting into a more structural market again? The thing is, if it's not moving for your market, don't use it, or don't trade the market because there's something wrong structurally with the market. Now this is starting to now shape us up again. We've had some structure to the upside. A retracement back to the pivot might be useful. It's gone before the pivot. It ran up too far. Of course it's going to roll back after doing all of that, but structurally I'm looking on the long side, so that wouldn't be a trade for me. Although yes, it's hit the pivot and the S1, but once again pivot's getting very pinched on this. Choose your markets wisely, and you can look at what the markets are doing beforehand. I'm not going to go through this any further because it's just the worst, one of the amongst the worst markets. And to be fair, the last month or so have been quite quiet and choppy if we come back to a daily chart in a lot of these markets. Excuse me. Look at what they're doing daily wise. They're a little bit of trend there, lots and lots of chop. When do you want to be trading them? Well, when you've got some opportunity. When was this? Back in September. Is the better time to be trading them? When they're doing this, to me, there's better opportunities out there. Even the euro's been sitting there in very slow markets for quite some time over the dailies. It's less interesting to me when it's doing this sort of thing. We talked about the euro or the CAD. Euro CAD has got much more trends in it. So which currency do we choose? Do we trade the dollar yen or the pound yen, or do we go and look at the euro CAD on a daily basis to see if we've got opportunities to trade into? So picking your fight, looking at structural movements is absolutely key. I'm not going to run through any more at this stage. I mean, you can see the battle on here would be a lot easier than the battle on a choppy yen. It just makes more sense to be looking at the right currency pairs. But I left you guys to choose them, but maybe they're your favorite currencies. That's fine. But for me, choice of your currencies, I don't care what strategy you're using. I'd be interested to know how much you're making money-wise or percentage-wise on some of these trades or some of these currencies, because I know for a fact I've sat there and talked to a broker from one of the major brokers, one of the major brokers on Thursday, I think it was Thursday, and there's not a lot of fun out there at the moment. There's not too many taking them for much money. So what pairs, what pairs would I choose then? The pairs that are moving clearly on the dailies, basically. Come out to dailies for intraday trading. I want to see trends. Come back to, we just run through what we're doing. Let's look ahead for this week even. What's happening at the euro at the moment is chopping. It's not structurally, it could be biased towards the downside in terms of what it's got going for it. The pound, structurally, some further downside running through it. It's been on a monthly basis been working really well with its pivots, and it may be that you look for some of the swings, but you can't swing trade when the market's chopped. Well, you can, but you're going to lose money when the market's chopping. How do you know it's going to chop? You don't. but just wait for it until it's showing its hand clearer. Say US dollar yen, it's been pretty ugly. There's been times way back when it was probably working better, but even the US dollar yen's not particularly great. The Aussie US dollar, this has been a lot easier for us. For me, it's in some better trends, although it hasn't always been the cleanest of markets. And when you cross pairs like the pound with the Aussie and things like this, they can be good, but I'll show you. But you can end up in some really nasty periods. And when your dailies are doing this, what do you think? What's going to happen with the intraday fact? You need these trend periods. Yeah, the last few days it's been working quite nicely. We've seen the dollar, the Aussie falling away, but then you can select carefully and look at, well, what's the Aussie doing? Oh, hang on a minute, this is moving better. Let's trade the Aussie dollar. So hopefully I didn't expect to cover this part here, but it's also it's important if you're trading pivots that you're picking your fights to the best potential. Here we got a better potential, but even during this period, look at how choppy it became for many days. It's only when you're looking for the breakdown with the structure above. You can see what the structure is doing. You're waiting for the breakdown, and off it goes. So there you go. Any other questions before I call it a day? But what I certainly suggest is pick your fight wisely. Look at your dailies if you're intraday trading. Look at your weeklies as well if you're trading. I'll change these pivots now. Sorry, take those pivots off from it. But look at what's happening on the weekly structure as well to see what's actually happening. Michael, I trade from 8 o'clock through to 3 o'clock in the afternoon. Normally most of my trades are on that basis. So I'm trading both the effectively we call it the opens, but I know what you mean. So I'm trading from when the volume picks up around the London 8 o'clock through to 3 o'clock when things tend to go a little bit choppier. And that that's one thing. It's a great question in terms of at times I've noticed more recently we've seen some of the bigger moves coming at 4 and 5 o'clock. And it may be that I extend my time, but yeah, it's yeah, variable. Okay. Okay. 4 hour trade. Yep. Okay. Mem, I know Mem uses it a lot because he updates me on what's going on with it, good and bad. So he's using the 4 hour time frame and trading the 15 minutes. So that's another alternative. If you've got something that's at least trending, but this is, I mean, this Aussie dollar, it's trending. It looks like a good pair to me if it's trending in the right direction for you. It's going through its choppy periods, but there's some nice trends within. If you can get on some of the trades, it's got maybe more scope. Although saying that. This is a 5-minute chart, sorry. It's okay, don't worry about me. But yeah, might be a possibility, but still look across the market, see what's actually giving you the best opportunities. Okay, on that note, I wish you then a great day, a great week, whatever else. Need anything more, just text me, or I say text me. It's not quite like that, is it? Drop me an email, kim@thepivottrader.com. There's Telegram, Discord, connections on the links here that you've come on through YouTube. If anyone else, I've got a Telegram and a Discord channel that you can just join free. And I've got a trading room, of course, which is available there as well. On that note, I wish you all a great weekend. What's left of it. It's hopefully warming up tomorrow, and I will catch you in the coming weeks.